What's up, everybody? Welcome back. For nearly 3.5 to 4 years now. It's crazy. Time has flown by. I've been making videos tracking my portfolio, my buys, sells, and dividends every single month and sharing them transparently with you guys. For some reason, some other finance channels can't do that. And the beautiful thing about dividends is even when I'm not uploading or really active on YouTube anymore, I still get paid every minute, every hour, every second. It's awesome. Stick around to the end of the video as well. I'll be sharing an update on what I've been doing recently with my life, where you guys could find me more of, and so much more. On to the video.
Hello, I like money.
Alright, so currently the portfolio value is sitting at $30,404.93, and it's kind of been averaging around the 30,500 to 600 mark when around September ended. I've definitely continued consolidating inside my portfolio, and in my opinion, just allocating my money to a more hands-off approach, more ETF approach based to investing, but also finding some good opportunities and ideas. Between SHD and SHG, I'd like to have that make about 35 or 40% of my portfolio worth, and then the other half of that in the holdings that I'm highly confident in for the long term. Companies like Visa. There's no need for me to just continue buying companies for the sake of it and over diversificating. That's kind of a problem that I dealt with earlier in my investing career, you could say. I'm definitely at the point though where I've kind of stopped consolidating some stuff. There's still a position or two in the portfolio that long term I see myself exiting though, but I'm happy where I'm at right now. Now that has taken a hit my dividend income, as you guys will see, but my portfolio performance has been much better. I've been selling out of some of those more conservative dividend payers and putting it into more growth plays, some quality businesses that have a stronger business model. They may not pay a dividend, but it's a better opportunity over the long term. And for me, somebody who's 18 years old, it just makes sense. But trust me, I still love my dividends. Portfolio performance has been very strong recently. We're still underperforming the S&P 500 for the last year and a half. Obviously, thanks a lot TD Ameritrade for going into Schwab, because my past performance before that is not shown. But right now, since May 31st of last year, we have a 22% return on the portfolio. Annualized, we have a 16.29% per return on the portfolio. Now, compared to the S&P 500, we're underperforming, but historically, we're outperforming. I'll take a 16.29% annualized rate of return any day of the week. When it comes to diversification of my portfolio, currently 75% of my portfolio is in U.S. large cap stocks. 12% of it is in U.S. small cap stocks. I have some international exposure as well, saying at 1.16%. I wonder what holding that is. And I have 11% of my portfolio in cash right now, which is historically the highest it's ever been. I'm really happy where the portfolio is at right now. I don't feel pressured to buy stocks, and if I don't buy stocks throughout the week, I'll just average into an ETF. I'm happy where it's at. Alright, we'll start off with the buys and sells currently this month, and it was a very active month as it has been recently with my portfolio reconstruction, just kind of solidifying those core holdings and the positions and businesses that I really want to compound over the long term. But of course, it has been an ETF based approach to investing for me recently. I want to build up my ETF exposure in the portfolio, much more hands off and efficient way to grow my wealth, in my opinion. To start off, we bought one share of SHG at $98.89. SHG and SHD announced that they would be doing ETF splits. The only reason this is really important is because I can average into them much more efficiently. I don't have to drop 80 and $100, which for somebody like me, that's a lot of money in my cash pile. It's kind of harder to average into these ETFs, especially if they go on dips. Like if it goes on a 5% dip, if I were to be scarce in cash, not that I am right now, it'd be historically in the past hard for me to take full advantage of it. Now it's going to be much easier for me to average in, and I would expect you guys to see me averaging in a lot easier and better into these ETFs. Then I sold some of my Altria. It was just a trim. It got to the price where I said that I would sell. It got to around $54, and I sold 2 shares of Altria at a 22% gain. I think Altria is a fine business, but you got to get it at the right price. And the market just gave me a really good price for it. And obviously, declining smoking rates, that's been the whole thing with Altria. The revenues and cash flows are still there. I'm not worried for them. They're going towards a smokeless future and vape, and they have other sources of revenue in the future. I wouldn't be too worried. But me, I think there's just better opportunities. So I put that money into one more share of SHG at $98.86. I sold out of my Realty Income at a 3% gain. This is long overdue. Thank you to Realty Income for your service to the portfolio, but I think there's a lot better opportunities. Then I bought 2 shares of SHG at $96. We went on a bit of a dip this week. $50 in Amazon at $172. I've been continuing to load up this boat that is Amazon and making it a core holding in the portfolio. I put $50 into Disney and $87.85. That has been a fun recovery play, and I'm still down on the holding overall, and I got to continue averaging down, but it has gone up a little bit recently. But if Disney eventually their cash flows pick up and the market reflects on that, I'm going to have some nice gains there. You see the final realty income sell I had there, an 8% gain. This was not a whole lot of realty income at this point, so don't overreact there. I averaged into Disney, $35 more into that. I bought one more share of SHG at $98 and one share of SHD at $81. A lot of people are on my ass for owning SHD. The way I'm constructing my portfolio is to have 25% of the portfolio in SHG while around 10% in SHD. This makes up for that underperformance that SHD is obviously going to have because some people can't comprehend that a dividend ETF is not supposed to outperform the S&P 500. But still, SHD has been growing their dividend like crazy this year with some supplemental dividends and some year-over-year increases, and SHG has made up for that underperformance that SHD has had in the portfolio. It's a really nice 1-2 combo, and on some of the days where tech is down a whole lot, my portfolio is kind of shielded with SHD, and I'm not underperforming as bad as some other people. So it's been a nice little play for me so far. It's not even 10% of the portfolio. And I did say here that I do plan to use the dividends in around like maybe 8 to 10 years to pay for experiences, Vegas, and other cool shit in my life that I want to do. I plan to start using those dividends in around 8 to 10 years. And while I'm only making about $20 a month in dividends from SHD, some months higher, some months lower, I do believe that that's eventually going to compound. It's a Chipotle bowl right now, but hopefully in a few years it's going to be a Vegas trip. Then this was kind of an unexpected sell for some people, but I did trim out of Apple at a 60% gain, and I got $460 in capital to play with from that. Now, Apple, I do believe from an outside perspective, and as somebody who does have bias as a shareholder, I think their innovation is slowing down a little bit. I actually see it as a consumer. Their just growth was not matching up with the valuation the market was giving it, and I did load up on some over the winter time, so that's pretty much those shares that I accumulated then, and I got out at a 60% gain. The market gave me a really good price, and I couldn't say no. From that Apple money, I put $200 into Amazon at $188, one share of SHG at $102.93. Then I sold another company in my portfolio, which is Kroger, stock ticker KR, at a 33% gain. This is about half of my Kroger position. I'm looking to get out of Kroger. I just think there's better opportunities for me in my time horizon. With that Kroger money, I put $100 into Visa after that DOJ news was announced at $269. Now, the only reason that I would sell a company like Kroger right now is if I saw a really good opportunity in the market, and I saw Visa as being one of those good opportunities. I put $100 more into Amazon at $193. I bought one more share of SHD at $83, continuing to average in there, and I put $75 more into Amazon at $188. I'm setting up my Visa position in that dividend growth and the snowball effect for long term to really blow up, and I'm putting a lot of eggs into the basket, but I'm highly convicted. All right, on to our dividends because we're high yield dividend warriors here on the channel. To start the month off, I got $5.69 from Visa, that got reinvested, $5.21 from Kroger, reinvested, $8.17 from Target. I'm happy I accumulated last year. It's turned out pretty well for me so far. $8.17 from them, reinvested, a whopping 67 cents from S&P Global, reinvested, $4.59 from Microsoft. I love ChatGPT so much, wink wink. $1.64, my last ever dividend from Realty Income. Thank you for your service. Not reinvested. $6.12 from McDonald's. That got reinvested. $1 in interest from Schwab. Thank you very much. $4.75 from a question mark position in the portfolio, Union Pacific. I don't know what I'm doing with them so far. It's just kind of a hole in the portfolio. That's what I've been doing. $3.08 from SHG. $20.87 from SHD, and those are both reinvested. So, even while I'm at college right now, I'm living my life. I'm still getting paid by all of my favorite businesses in the portfolio, and it's very nice. $66 every month isn't too shabby. That's a few meals, a few nights out. I'm not complaining. And this is my dividend income over time, over the last 2 or 3 years now, and I'm not complaining. It's fluctuated for sure, but you could see the shift of me just kind of going out of those more conservative, dividend-oriented plays, and you're seeing it in my total return right now. I'm doing much better, in terms of total return. and I'm getting more money at the end of the day in my pocket than I would have. I'm just getting paid in a different way. Little update to me in the channel. I've just not had the motivation. I have had the time, but I just haven't had the motivation to be making videos on this channel. I have been focusing my efforts a lot more towards my live show, The Cash Flow Kings, every Saturday, 8 p.m. Eastern. It's just a lot more sustainable for me doing that. I'm still going to continue doing one portfolio update every month, but there's just like not much for me to create about on this. I don't love making 3 stocks to buy videos. It's just like it's opportunity cost of the day. I've been, trying to be a lot healthier as a person, in every aspect, and life's good right now. I started school. That's been going interesting, and yeah, that's about it. I've been dialing in on myself and trying to grow as a person. With the time that I typically would spend making 3 or 4 videos a week, maybe a year ago, I'm just trying to use it to better myself as a person for the long term. Expect me to go live every Friday around 1 o'clock on this channel. I'll just be talking. I've been having a good time on there. And of course, every Saturday, 8 p.m. Eastern, in the Cashflow Kings. And once again, I will still be posting a portfolio update every single month here. I don't know what the future holds for this channel. It's just like I don't feel like slaving away all my time for an extra like 50 or 60 bucks a month. I make that through dividends. Thank you once again though for all supporting me throughout this interesting time in my life. Subscribe, turn on post notifications, become a channel member if you want to go the extra mile. Do dividend stocks, not drugs, and have a good one.